Hello everyone, how's it going? In this video, we're going to cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been very volatile as of late, with many titles having huge up and down swings, and the volatility of BBBY may be able to provide gains or losses for people who want to test their luck. So in this video, we will take a look at the stock from a technical and the fundamental perspectives, and to determine what could be a recommended action plan to carry out for BBBY. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description section, as every help is greatly appreciated. So, over the past few days, I would say that things have been relatively stable with BBBY. Currently, surfing around the 80 cents level. And looking from a perspective of like the past 5 days, yes, things have taken a tumble from $1 back to like 80 cents, but I wouldn't say that this is really that bad, all things considered. It could have been doing far worse. The bad news are currently like pricing in by concert, and I would say that this stock needs time in order to do better. The other thing is, of course, we are assuming that going in, like BBBY is going to benefit from how can I put this? They're going to benefit from an uptick in volatility, if anything. And at some point, people are going to realize that, whoa, they're currently like pretty low historically speaking, so how much lower are they going to go, right? The other thing is, we are now assuming that going concern is going to be assured. Things are going to be ugly for a while, but unless the company says, you know what, we're not going to be able to continue, let's just liquidate. So in other words, not chapter 11 but chapter 7, if my memory is correct, then that's going to be ugly. But we're not there yet. And going in, our assumption should be, well, things are not going to be worse from now on. And also, they're going to continue their existence. I don't say this because I know that this is what's going to happen. I just say that we need to look at the whole thing with a relatively positive outlook. Otherwise, it's not really worth our time and money, especially money, to go into BBBY in the current stage. So, of course, if you look at the past 5 years, it fell by like 96%, and that's not even from the peak. From the peak, it might be like 99.9%, right? So, personally, I would say that if you're interested in seeing a stock potentially coming back from nothing, then by all means go for it. But I wouldn't be surprised if the real hard support would be around 60 cents, not where it is. I think that it's still going to take a while before it can recover back, and in the meantime it's going to go lower. So I'm not saying that this is going to happen for sure, but I would say that it shouldn't surprise me. And our position, if any, should be considering of this possibility. Yeah, should at least consider that possibility. If it happens, then we're gonna add in some more. If it go bankrupt, then at least we didn't lose that much because of the exposure that we can control. Bed Bath & Beyond is a home goods retailer operating under the ticker symbol BBBY. It is founded back in 1971 and is headquartered in New Jersey, operating stores in the States, Canada, and Mexico. The company has a wide range of products at home, including bedding, bath towels, kitchen electrics, cookware, window treatments, storage items, and so on. They carry a lot of home decor, giftware, and housewares as well. The company operates both physical stores and e-commerce websites, giving the opportunity to shop on both platforms. One of the key strengths of BBBY is the strong brand recognition. The company has built a good reputation over time, offering great products and competitive prices, which has attracted a loyal customer base over time. So, another strength of the company is the diversified business model, in the sense that they sell a lot of different kinds of goods that are non-perishable to the customers. So, in some sense, I would say that this diversification helped the company to mitigate the risks and to generate stable revenue streams. BBBY is also successful in developing strong relationships with suppliers, which is very important for a retail business. So, they have been able to secure those relationships with competitive prices, timely payments, and also being a reliable business partners to its suppliers. Now, with that being said, the company remains under significant sell-off pressure due to the company's specific and macroeconomic factors. The main reason people are interested in the stock might be because of the stock price itself or the volatilities from the stock market rather than on the fundamental side. Because fundamentally, BBBY is a retailer with a lot of brick and mortars. This is something that you don't necessarily want to see in today's economics, given people's shopping behaviors. Over the past 5 years, BBBY's revenue steadily decreased, with a decline of almost 20% between 2017 and 2020. This decline has been accompanied by a decline of earnings as well, as the company reported losses for several of its past 5 years. In terms of stock performance, BBBY's shares have been under pressure in recent years, having lost about 70% of their value since the peak of 2015, and since then underperformed compared to the overall market. It has also been facing increasing competition from e-commerce giants like Amazon, which has made it difficult for the company to maintain the market share and to drive additional sales growth. Also, the company has been struggling with declining sales in its physical stores and increased competition from the online retailers. To address this issue, the company has been focusing on store closures and cost cutting. They closed down many underperforming brick-and-mortar stores and are looking to reduce its workforce, closing distribution centers and consolidating the supply chain. So those measures are certainly good, but it's hard to say if they're enough. In fact, we're almost certain that they are not. Because despite those efforts, the company's financial performance has not really improved significantly over time, and in the most recent quarter, the company reported a decline in comparable sales, and the company's guidance for the next quarter can also be weak. So, this is not the only issue facing the company. Those financial results are now affecting the company's assumption that it'll continue to exist. The current sharp decline in BBBY's price action is mainly caused by this concern, which also incidentally created a great amount of volatilities. More than 40% of BBBY's equity is owned by people that we can call institutional shareholders. In other words, they manage other people's money. The rest is owned by retail traders, people like you and I. This means that while the stock has a relatively high volatility, in theory, it's also a good stock to invest in for the long term, if there were no going concern issues. So, one key behavioral difference between institutional and retail shareholders is that institutionals can afford to wait and to play the long game, whereas the retail shareholders tend to trade in and out, believing that the more they trade, the more money they will make. This often results in a more volatile behavior as a shareholder. And another behavioral difference is that institutional shareholders are far more active in corporate governance, meaning when they have shares, they tend to vote on important decisions, whereas the retail shareholders very often don't bother doing so. In the current context, I would recommend not to invest in the stock, certainly, but to mainly consider the stock for its trading opportunities. The reason I say this is because the fact that it has a large number of institutional investors could be misleading in our decision taking. One of the key catalysts that could explain retail interest in BBBY stock is also the short squeeze potential, due to the significant short position against it. There are currently about 70 million shares being shorted off exchange, which is about 55% of the short volume. This can support the theory according to which there is a concerted shorting operation against BBBY, which, by the way, makes sense fundamentally. The stock isn't doing well, and the business model is relatively ill-adapted to the real economy as we speak. So, my recommendation regarding BBBY is that overall, is this a company that's worth your while to be added in your portfolio eventually? I believe that it's yes. Okay, we might not have reached the bottom just yet. However, we're pretty close to it. The other thing is, my assumption remains that BBBY is going to be able to survive this whole episode. So, if your assumption differs from this, I would say to maybe start looking elsewhere, because if you think that BBBYs go bankrupt, then the best play would be to short sell it. But at its current price, I'm not sure if it's still worth our time doing so. The other thing is whether BBBY should be entered now. Well, personally, I believe that BBBY can be entered now, at least as an initial risk-taking, as an initial position. And then at least 60% of your allocation should be bought in within the next 6 months. And the maximum exposure I would recommend for BBBY would be around 1% of the portfolio.